Hello and welcome to this episode of FinTech Focus TV, brought to you by Harrington Starr, global leaders in financial technology recruitment. Head over to the Harrington Starr website today, where you'll be able to download our brand new documentary, The Era of Convergence, which charts the merger of traditional and decentralized finance. You'll also be able to see our new magazine, The Financial Technologist, with the top 1% Workplace Awards. Enjoy the show and we'll see you soon. Hello and welcome to our episode of FinTech Focus TV with me, Toby. Today I am absolutely delighted and very excited to be speaking to Alex Zeltcer over at nSure.ai. How are you?
I'm great, Toby. Thank you for having me over.
It's an absolute pleasure. I've really enjoyed talking to you before this, and I know we've got a great conversation coming up. You're over in Tel Aviv in Israel. We've already established that we've got a fair few similar contacts, etc., in the industry, which is exciting stuff. But loads and loads to unpack. Before we get into all of that, tell me a little bit about yourself and the business.
So just a little bit about my background. Half of it is roughly with corporates and half with startups. I started with a large Israeli corporate called Converse at the time. We were the world leader in voicemail systems and more than 50% market share. It was a very fun journey. And then later I was brought on board to run a company that the soft systems acquired in Israel. Done that for a few years and then helped them grew the business from about 30 million to 100 million for our line of business. It was very intense, I would say, journey at the time for 3 years. And then from that point on, kind of launched a number of startup companies. First was a very interesting one, an online farmers market, a company named Artisan, a zone for artisans. And we've actually delivered from small farms, small producers, cheese shops, etc., in Dallas, Chicago, and Denver in the US very early on in 2009, 2010. It was a very interesting business. It also scaled very nicely. Eventually, we've had dozens of trucks and drivers and cooling space and you name it. Sold it through a couple of grocery chains in the US. Came back to Israel. I was there with the family for a time, around 3 years in Chicago. Came back to Israel and was brought on board to run a company called Zik. And Zik was a gift card marketplace, which is where we learned how difficult it is to sell digital assets online.
Yeah.
So we started in Israel. I was not with the company at the time. We started in Israel, and there was a nice business, a small business, and we didn't see any fraud, didn't encounter any fraud, and decided to launch in the UK as the first market we go outside of Israel. Like many companies, we were looking for either going to Europe or the US. Decided to go to the UK, launched the business. Within the first week, we were very happy because we ran out of inventory. A week later, we learned that 40% of it came back as chargebacks.
Wow.
Not very happy anymore.
Yeah.
Shut it down, and tried to figure out, how to deal with that. I came on board probably about a year later, and at the time, we've already taken a decision to invest heavily in fraud prevention on our own because we couldn't find anything out there. And probably 2 to 3 years following that, we realized that what we developed was significantly stronger than what was available to the market from in that specific domain in digital assets. And looked at that domain a little bit closer, tried to figure out what industries, what verticals make sense, and actually decided to spin it out, brought investors, external funds from investors, acquired the technology and the team, and started nSure.ai, which is the company I'm with now. So a very interesting journey. We solved the problem for ourselves and realized that it's a much bigger problem than we expected, and that's how nSure.ai came to be.
I love that because it's so often the case, isn't it, of just being disgruntled with an issue and then finding the solution to it and taking that further forward is the I guess the starting point of many a business. But I think it's really, really interesting to see how that was solving your own problem for your own company. So tell me about the company which you were with beforehand. Does that still exist? Is that something which is ongoing? Yeah.
Zik encountered some difficulties with liquidity. Eventually, we grew. I would say we grew too fast. We got to over, I want to say 120, 130 million a year.
Yeah.
And had a credit line that was eventually kind of cut off from under our feet, which deteriorated the business, and eventually we found ourselves, instead of buying the technology from the board, we bought it from a receiver, which for nSure actually was a much better deal, to be honest.
I can well imagine. So, but it seems like from what you were saying, this sort of became the journey that allowed you to to probably follow a passion that was more of a passion anyway, from what you're saying. So it was kind of the pathway for you to be able to start nSure.
Exactly.
And that's where it went. And I think as a founder, that passion is so important to actually be loving that problem, loving solving that problem so much to be able to take it on. So this is just suddenly opened up a whole load of things I want to go into from it. So from successful startups and scale ups and seeing businesses, as you say, go from 30 to 100 million pounds and being on that journey to then going to do something completely different in a completely different zone and area in Chicago, through to starting up a business that sort of encountered the difficulties, through to going again and picking things up. Speaking to people who are at the start of their journey at the moment or going through their journey as a founder, as an entrepreneur, what would you say some of the lessons that you picked up on that journey would be so far?
Advice number one is don't do it. Do something else. Kidding aside, I think that and it's a cliche, right? Believe in what you're doing, right? Find something you believe strongly in and go to that. I think is the most important element. It was very similar for me with Artisan as well. I'm one of these guys that would go, on for us, a Friday is the weekend, right? In Israel. So I would go on a Friday. I would probably visit 7 or 8 different vendors, different small stores, the butcher. I have my butcher that I like to go. There's the fishmonger, there's the guy that does the produce and all of that. So I would literally lose like half a day on doing that. And the reason we started Artisan was, it doesn't have to be that hard. There's no reason for it to be that hard when technology is there and you should be able to get it to work for you. And it's very similar here at nSure. I think that finding something that is close to your heart, not necessarily fall in love with the problem, right? Fall in love with the solution if you can. But
that's true.
But finding the solution is not easy. It took us a very long time, I would say, for both at nSure and at Artisan to find what really works, what does this efficiently, and what can scale. Because when you have a certain problem and you find a solution for it, even if it's a big problem, it doesn't mean it can scale. And a very important element, I think, from and beyond finding a problem that is big and that you really want to solve, is find something that you believe can scale. And because if today in the startup world, if you cannot show 10x or at least potentially 10x outcomes within a few years, you're not going to get funds. So it's important to realize what it takes in order to build the business.
Do you think that the current climate changes that realizations and expectations are becoming a little bit more, because look, I think there's 2 things that were out of kilter over the last couple of years. Number one was valuations of tech businesses. And number 2 was expectations of tech businesses at the same stage. So if you look at the failure rate of Series A and B in particular, and businesses that are going through those sort of raises, there's an awful lot of attrition in that space. The percentages are sort of pretty frightening. And I think a lot of that is around investor expectations and the demand for instant gratification. And I think, when you can look at it and you're out of that sort of, sane world of profitability and profitable growth, and you're going through those sort of loss making and pathways, it's always laced with a bit of danger, isn't it? What does the current circumstance or the macroeconomic environment, do you think that can be a good thing sometimes for the tech industry? Do you think there's things there that change the game a little bit with some of those 10x expectations that we're talking about? So
I think that it's wishful thinking, to be honest. I think that they'll go back to their game, as soon as they can.
Reverts to
not saying anything bad. Not saying anything bad about the VC community, but the VC community has a business model in place, same as other businesses. And it doesn't work if you cannot achieve certain growth, numbers for the businesses. So, in my opinion, that's not going to change. What may change, and every crisis we learn a little bit about that. I've seen the crisis in 2001 and 2008. COVID was, similar to a certain degree, but was very short. Now we're in the midst of financial downturn that we haven't reached the bottom of yet, in my opinion at least. So there'll be a lot of learnings here. I think that one of the phenomena I've seen is that the startups fail when they try to scale when it's too early. Startup is a journey in reducing risks. Right? You start with, you have an idea, you don't know if it works, you go and you build something, you create an MVP or whatever, then okay, now it works. Your dream can come true. Then you're looking for product market fit, right? You need to figure out whether there are people out there that would buy what you're selling at a price that is higher than what it costs you to create it, right? Because otherwise there's no business. So go through that, and you want to figure out, what's a good enough, traction, right? So if it's consumers, it's, you're looking for tens of thousands or maybe even hundreds of thousands of consumers. When it's businesses, it depends on the size of the business, right? If you're charging $100 per month, you best have, hundreds of clients. If you're charging, $400,000 a month or a year, then, 4 or 5 are probably enough. So you figure that one out, you've got that done. And then you look for go-to-market fit, right? Then you need to verify that you can bring these clients at a customer acquisition cost that's balanced with the lifetime value. If you're bringing someone in, let's say, yes, you're selling for 100 and it costs you 50. Great. Now, if it costs you 500 to bring the client, then, and say the numbers are per year, it's going to take you 10 years to get return on investment. There's no way this is a good business, right? If it takes you 3 months, then great. So you need to figure out that you've found a go-to-market strategy where the customer acquisition cost and lifetime value balance out well in a few months. Once you get there, then you're saying, okay, now give me $20, I'll do 40, or give me 20 million, I'll do 40 million, right? Then you get into this scaling area, and that's where a lot of them fail, in, again, my opinion. They believe that the bigger you are, the lower the customer acquisition costs are. And that's simply not the fact. That doesn't happen. Normally, what you would see is that while you're crossing that chasm, you'd see the customer acquisition cost going higher because you've started with the early adopters. It was easier to get them. Now getting the mass market is harder. You need to figure out that before you start scaling too fast. What we're seeing with investor expectations that are saying, hey, I want to see you grow, times 3, times 3, times 2, times 2, or whatever the model is for SaaS companies. If you're missing it by not a lot, they're saying, hey, you have to do more. What do? You add salespeople, you add, you add whatever you need to add. Then you find yourself in a situation where this CAC to LTV doesn't work. And that's when you fail, because you cannot continue. You cannot convince someone that you know how to do it, because someone convinced you need to start growing too fast. And I think that managing that and being able to identify the point where, yes, now we got it figured out. Now let's start investing, and now let's start scaling. That's a difficult piece. A lot fail before that happens. But those that you have mentioned, after B and area, that's normally what happens.
And tell me where you guys are on the journey at the moment.
So we're in the middle of I would say between product market fit and go to market fit. So we're currently running at a pace of north of 2 million a year from a revenue perspective. We've about double that. At this stage we can say product market fit is there. Obviously the cost is much lower than what we're charging. So product market fit is there. We're still not at the point where we can say go to market fit is figured out, because our clients are pretty large, deals that are hundreds of thousands per deal, and you can imagine that the number of clients is not very large. And if it isn't very large, the statistics don't really work. So you need to really figure out what you believe customer acquisition costs really look like at scale. That's the journey we're on. We've just hired a chief revenue officer that has done a similar journey at a similar company in our domain, and that's gone from 10 million to 100 million in revenue. So, which is exactly the journey we're taking now. So we're bringing on board the right people to help us figure out, when we've got a go-to-market fit nailed in, so that we don't make that mistake. And that's exactly the point where we are now.
And you're Tel Aviv orientated or based?
Right.
How scalable is that? Are you purely focused on Israel, or are you moving across to? Is this a global solution you've got?
Yeah. We have one very small client in Tel Aviv by chance, by someone I knew from the past that has a business in Israel and gift cards. But beyond that, all of our clients are global. We have clients in the US, in Southeast Asia, and in Europe, and we'll keep on focusing on Europe and the US. At this point, we have a team now in the US, and we have 6 people there already.
Okay.
We're starting to build a team in Europe. We just hired our first person in Ireland, and
Okay.
may be hiring someone in the UK. We'll see. So we're starting to build the team in different countries as well. We do have a small development team in Georgia, primarily for talent acquisition problems, not for costs. It's been, in the last 2 years, it's been impossible to get talent in Israel. It's a mess for various reasons. So we've already started scaling beyond beyond Israel as a base. From an organization perspective, we're 40 people today, and of those, 27 are in Israel. So it's still the majority of the people, but we're growing faster now, I would say, in the US than we are in Israel.
And
for the sales.
What does the future look like for you?
From nSure, we can talk about nSure and about the industry.
Let's start with nSure, and then we'll move on to the industry.
So a few words about what we do, so that I can share.
That's probably a good starting point. I got overexcited with the journey.
Yeah. So a few words about what we do, and then I can take you through what I believe are our next steps. So nSure is really all about fraud prevention, right? It's about payment fraud prevention. Payment fraud is what happens when someone uses your credit card or PayPal information and to steal goods online, right? So they got their hands on your credit card information, and they're buying a pair of shoes on Nike.com. What people don't necessarily know is who's actually taking care of the loss, right? Who's actually liable for the loss? And if this is a physical transaction, so if someone uses your credit card information and Nike on the Fifth Avenue in New York, it's the banks that need to take care of it, the issuing bank, the acquiring bank, somewhere in between. If it's a card not present transaction, everything that's done online on Nike.com, for instance, that's a Nike.com issue. They are covering the loss. As a result, there's a whole industry of solutions that help them take the right decision, right? Because a merchant is not a risk, is not a risk manager by nature. So they use these type of tools. It's started as soon as e-commerce came to be in the late 90s. And today there are various tools that help them in different business models. And nSure follows a business model where we provide not assistance, but actual decisions. So on a per transaction basis, we'll say whether that transaction is good or bad, and we will back it up. So we will insure the transactions. It means that we say about a certain transaction it is good, and if it is eventually charged back, meaning that a fraudster has committed that, we pay for the chargeback. That's what nSure does. And we do that primarily for digital assets. Which is
an interesting space at the moment as well.
Oh, an amazing space. We can talk crypto for a very long time. We have a couple of clients in there that at least to this day are not seeing any downturn at all. Not saying that there's no crypto winter. Obviously there is, but from at least from where we are plugged into the business, from a fiat to crypto perspective, right? We are helping on ramp fiat into crypto. We haven't seen it go down.
So my view on this is that companies like yours are essential to the next phase of crypto. So crypto is about, the way it moves further forward or it doesn't is all about based on trust and transparency. That's the thing that's missing, that stalls the whole thing, that's created this whole volatility that we're seeing at the moment.
Yeah.
Last night we had the premiere of a documentary we've just launched, which is called The Era of Convergence. So this is about traditional finance merging with decentralized finance and the opportunities therein. And if you look at the narrative behind all of that, if I'm going to take 3 months worth of interviewing people all over the world and everything in between and really boil it down to what it means, is the Era of Convergence is all about the digital asset space that's got such great technology and such great use cases and such great potential to make things easier and more secure for people, and underlying it with the traditional finance elements of trust, regulation, and transparency in between it. Because if you can dispel that myth of money laundering and fraud and the volatility that's seen from people and the get rich quick schemes, etc. What you've got is something underneath it that is truly transformational. And I think that when you look at companies like nSure, the appetite and investment of major institutional banking organizations putting their money into it and recognizing the potential of it, that's to me where it gets really exciting.
Yeah, I couldn't agree more. I think that what we're seeing in the crypto world, the reason we actually decided to launch that industry for nSure is we realized that the trust, or the way that they're handling trust, is broken. And if you look at crypto exchanges today that are accepting fiat as a payment method, whether that's credit cards or bank accounts or PayPal or whatever, the decline rate for them normally is in the range of 60%. They decline 50 to 60% of the people that come in with the intent to buy, providing them their credit card information. If you think about a normal e-commerce business will decline 60%, right? It'll be out of business. It's insane. And the reason it happens is that lack of trust on both sides, by the way. The exchanges are very worried that a big chunk of who's coming are fraudsters, and that's simply not the fact. And we're seeing them add tools such as KYC, right? KYC, know your client procedures, are prevalent in the fintech industry for years. By regulation, they are now required in crypto as well, but they're required only at a certain threshold. For instance, in Europe today, they're not required below 2,500 euros. In the US, it's $3,000. But we see crypto exchanges, because they're worried that people are fraudsters, they will go through KYC for every account, sometimes even for more than one transaction per account. And that friction would deter people. And they are using KYC in a way that is completely irrelevant for the industry. When you think about the digital asset industry, you think about where KYC is coming from. This is all about identity verification, right? You're trying to verify that the person behind the scenes is the actual rightful owner of the payment instrument being used. In our experience, it fails miserably in the digital asset domain, not only in crypto. For instance, imagine you're playing games on Steam. You're buying on Binance and you're shopping on Tesla.com. Probably using 3 different identities for this activity. You have an avatar on Steam that no one knows. It's definitely not called Toby, right? There's absolutely no way. I don't know if on Binance you would use your Gmail account or you would use something else. So when you're employing identity verification for digital assets, it fails in a way that simply creates what we call false positives. You're simply declining good shoppers. That's it. And this entire ecosystem of trust doesn't exist. And the only thing we do is we bring to the table a mechanism that is completely transparent from a user perspective, from a consumer perspective. It looks at tens of thousands of features of data, allowing the merchants to take decisions without any kind of friction. Looking at every keystroke, at every mouse gesture, at everything you're doing. If you're using your finger on the mobile, we're looking at all of that to verify your identity in a way that is way stronger than whatever KYC or other mechanisms are available. And building that element of trust into these domains, into digital assets, in gaming, in gift cards, in crypto, etc., is exactly what we do. And I think that's an element that the industry is lacking today.
Yeah. I think this needs a whole nother show, doesn't it, to carry on and talk through. And it's really in a subject that's sort of at the moment very close to my heart, having put a lot of time into speaking to people in the space over the last couple of weeks. So rather than deep dive into it, let's talk about where we were heading. Now we understand where you're at, about what that means for you in the business. You've gone through a really interesting phase of growth. You said you've got the product market fit, as you know where it is. You spoke about the lessons you've taken before about the sort of size and speed of scale and making sure you're getting that right. So at this phase of the journey, what's important for you right now, and where does it head? What does 2023 look like for you in the business?
So 2023 is going to be all about a repeatable sales motion, to figure out what is it that makes our sales predictable. Because today predictability is not yet there, which is okay, right? We just crossed the product market fit piece, but now we need to get predictability. And for that, we need to scale our sales team not by, we don't need 100 people, but we need 5, 6. And simply in order to have enough statistics and gain, a couple dozen customers next year and be able to use that information to really figure out the sales cycle, what are the hurdles we're finding in there, what kind of objections we need to overcome. We have that information, but I don't think we have that scalably at this point. We have that for the early adopters, etc. Exact point I made, just discussing that. So we need to figure that one out, and that's exactly what we're building now. So we're building that sales organization, and we're building a marketing machine and an SDR, sales development machine, in order to achieve a certain scale without investing too much funds into nothing, but investing enough of what we need to create that repeatability. Once we get that repeatability, and we'll see that by the pace of which we book revenue, right? It's very easy to see that. And once we get there, we hit the button and go raise more funds to really grow the business and scale it significantly beyond.
That's fascinating, isn't it? And so that you go through there, and at the moment it's seed funded, I presume.
No, we're A. We've done A. We are very lucky to cross to get funding in May. So and I say lucky because we were
timing's everything, isn't it?
Timing is everything. And as I said, it's we had no intention of raising funds, to be honest.
The best way, though, right?
The best way. And as I said, we didn't plan for the downturn. We were just lucky to raise funds before it kind of hit. Before it all hit the fan, and so now we're really well funded. We have at least a 2-year runway, which gives us stability for this period we need, and the ability to grow the company.
And for these salespeople coming into that business at the moment, that's a perfect opportunity, right? Because you've got a good runway. It's a business there that's got product market fit, as you say, and the size and scale of the market is. It's quite frankly extraordinary, right?
Yeah, is enormous. Yeah, if you look at the total addressable market for the digital assets, from our perspective, it's billions and billions and billions of dollars. Yeah, insane.
Yeah,
insane.
And so that becomes a very if I'm a salesperson, I'm looking for security, and I'm looking for that sort of the right company to be joining. I'm looking for someone who's backed. I'm looking for someone who's got an international scale. I'm looking for someone who's got a product that's needed in the marketplace. I'm looking for scale. Sounds like you tick most of the boxes on that, right?
I think so. And the most important thing is you're looking for where you can, overachieve your sales target to get acceleration, right?
Exactly right.
That's the piece. That's what's important. That's it.
And so it's exciting times for the business, and it sounds like you've got a lot to do and a lot to achieve. I can tell just by talking, seeing you animated when you're talking about the subject itself. It's exciting about what way you can go. We touched on it beforehand. We're seeing a lot of having a lot of conversations with Israeli businesses who've looked and sought to scale internationally. And in Israel, as you mentioned before, whilst it's a very, very talent dense zone, you've also got a real difficulty in wrestling for that talent within the space. As Israeli businesses have grown, and there's people who've had spectacular success with it, they've also had to quite often kiss a few frogs to get that bit right. Now you've had international experience yourself, having moved the family and lived abroad. But tell me a little bit about how you're getting that bit right. How are you getting the internationalization in Ireland, the UK, in the US? What are you doing to get that right and make sure that this is, because I think that's difficult in any, I do it myself. I've got offices in Ireland. I've got offices in the US. And there's a load of things I've learned over the last few years about how, that you have to almost get mistakes in to get right over time. I'm really interested to see what you take from that sort of journey and how you're addressing that to get it right.
So first of all, I think it is a big issue, right? It's a big problem. You cannot do everything from one space, even though everything today is you can do a lot of things remote. Still, not having the presence and not having the right mentality of the people or the right cultural adaptation between the people you want to sell to and your sales team is crucial. So, and there are many different layers or maybe different access, right? So it's you need to get the culture right? The most important element and the critical element is how do you build an organization that is both international and adheres to a certain list of core values, right? Because if you lose your core values, you're going to be done as an organization, no matter what you do, right? I strongly believe, I don't remember the name of the person who said that, but it's culture eats strategy for breakfast.
Peter
right?
Drucker, wasn't it? Yeah.
I forgot that. So yes, it's true, right? It's really true, and doing that cross border is not easy because culturally we're different. So how do you manage that, and how do you verify that the people you bring on board are the right DNA, right, for the organization?
Yeah,
and there are many things that you can do, systematically. One of the things that we are doing internally, and that I've been doing with other companies, is we make sure that the interview process is rather lengthy, meaning there are many steps. It doesn't have to take a very long time, but there will be 6-7 people that you would see from the organization, and everyone has a veto right. It's enough that one says, I'm not certain, and it's done. So you have to have consensus about the people you bring on board. That's probably the only decision I believe in consensus for. There's hierarchy, there's structure. You take decisions based on data. Here, I'm looking for consensus, and that's extremely important from a cultural perspective. I think that's number one. Number two, you need to make sure that you have the infrastructure set up. So there are many things that you miss. I can tell you, we have a team now in Georgia, right? There's a small team in Georgia.
Of course, yeah.
We didn't even know that they prefer to be paid as as subcontractors, because that would get their tax ratio down to 2%, versus found a way to hire them like naturally they would pay 20-something%. Yeah, there are things you need.
It's amazing, isn't it? Yeah.
It's amazing. It's amazing. And you never know, right? You always think you know everything, and then everything, and you figure out, no, you don't. You don't.
I know that feeling.
Exactly. Make sure you have the right help on setting up the infrastructure from a financial perspective, from all of that. So make sure, and the reason is you need to treat your people right. You need to have the people there. You need to make sure that they have the right tools and the right environment to excel, right? That's our job as leaders, right? Is to make sure that they can excel. And I think that growing the business, and we've done that with a number of companies, growing the business internationally is all about accepting the fact you don't really know how it works there. So a few people you trust, let them run, let them do their thing. Don't tell them you know better. You don't.
That selection's so important there as well, isn't it? So we're seeing it a lot, that those first people on the ground in those territories are critical hires to be making, and it's not easy to get it right, because as we said exactly, and we said beforehand that there's an infrastructure in Israel that allows referencing. That's pretty much you know what you're dealing with. So when you're making a hire, I think it's someone there who someone will know someone who knows that person and can vouch for their credibility. When you're looking internationally, suddenly that's taken away from you. It becomes it's a lot more. So I think that advisory piece about making sure that you're thinking and not rushing into that hire, and you're having the right sort of support to make that, has been something that we've seen.
Make mistakes from that perspective, fail fast.
Fail fast, exactly right. Yeah,
is the best advice I can give. You feel something, you've hired someone, you're certain it's going to do a great job for you. Something doesn't work, regardless of his performance. Something doesn't work culturally. Forget it. Let him go. It'll be better for him. It'll be better for you. Go.
And that comes back to the pure thing about culture.
Yeah, it happened to us with nSure. It happened to us twice.
Yeah,
you cannot avoid that. You cannot avoid
it.
Yeah,
I think people are so paralyzed about not making mistakes sometimes that they don't make those calls. And I was speaking to a mutual friend of ours very recently about this, and I think he's talking about this sort of almost false economy of trying to get bargains for people who you're looking to bring into your team. And one of the things that he passed on in his podcast that we did recently was that this is sometimes you've got to you pay that bit more to get the right person who's going to be there, and not quibble about is that person 50,000 cheaper, but actually not going to be pushing it further on. There's a lot of lessons to be taken out of here, and and I know that's a whole nother show which we can look at a different stage. Alex, we said beforehand that this time would race like that, and it's gone incredibly quickly. And I feel like we're only touching the very sides of this. It's been a fascinating conversation.
I'd love you to come back on again and explore lots of different angles. I've got an idea as well about how we can put something together with a multi-participant thing of various different people. I'd like to be talking to a group of people in a debate format around, I guess, the scale, the rise of Israeli businesses out there, etc. as well. And we can talk through all of that. But I'd love to involve you in that conversation too.
Yeah.
I'm gonna finish with just one question for you, Alex. Who should be getting in touch with you at the moment? Who do you want to be speaking to? Who can you add value to, and how do they get in touch with you?
So I think whoever sells digital assets online, from a client perspective, right? Whoever sells anything that is delivered immediately and has liquidity, whether these are games or gift cards or crypto or other digital assets I'm not even aware of, these are the types of organizations we can help. And what we can help on is really increase their revenue. We can really help their business by not creating so many false positives as the industry is used to. It's not a cost of doing business. It's not a necessary evil. So that's where we can really help. And you can find us online on www.nSure.ai. It's very, very easy, nSure.ai. We're always hiring. So if this is something that is of interest, just follow me on LinkedIn and send me a message, and I'd be happy to speak and get you in touch with the right people.
Well, we said before, look, there's a fairly compelling thing for people to be joining you at the moment with where it goes. It's the sort of time and scale of a business that I think is just perfectly situated to get in at the right sort of stage and see something which sounds like it's going to be a pretty cool story to be involved in. So please do reach out to Alex. It's been a pleasure having you on the show today. Love getting to know you and finding out a bit more about the business. And look, there's going to be plenty more that we're going to be talking about in future months, weeks, and years, I'm sure as well. But Alex, thank you very, very much for coming on the show today.
Thank you very much, Toby. Really appreciate it, and had a lot of fun. As you said, it's going up like
It definitely did. Thank you all for watching, everyone. We will see you soon on another episode of FinTech Focus TV. Bye for now.